ready to rock and roll? Yes, we are. Let's bum over here. Okay, I got a base chart up. All right, guys, what we're going to talk about today is the alpha trading Pearson correlation indicator. Okay, what does this indicator do? What is a Pearson correlation? All right, it's going to correlate two assets, or it's going to correlate indicators. It can correlate indicators to price action. So this is so people are like, oh, well, what is it? Just a blue block? Is that what the indicator is? No, you have to understand how to use it, right? Let's open up the Pearson correlation setting. Okay, very basic, right? We got the source. This is going to come in. This is the biggest. This is going to be the biggest part of this indicator when you're correlating indicators to price action. Obviously, I just have a Pearson correlation up right now. Source 2, default will be current symbol, Bitcoin futures. You can't correlate Bitcoin futures on FTX to Bitcoin futures on FTX, right? So what do? What do I want to correlate to Bitcoin? And why do I want to correlate two assets together? I want to see if these assets are correlated. Are they negatively correlated? Are they positively correlated? How do I use this on a higher time frame? I'm looking for altcoins that are significantly positively correlated with Bitcoin. And so if I enter a Bitcoin trade, chances are I'm entering the same trade on the altcoin that is positively correlated with Bitcoin, because that's telling you the price is going to move together, right? So take, for example, what do I want to correlate Bitcoin to? Let's check out ADA. Let's check out Cardano. Let's see what's going on. And we will go to, where's Cardano been for a while? You know what? We can go to Binance, but I want to go to Tether. Tether pair on Binance. Where are you, booger? There we go. No, that's futures. Tether. Boom. Okay. There we go, ladies and gentlemen. This is the correlation coefficient, right? This is Pearson correlation. It's telling you what, if you just take one peek at this chart, right? And is what we're going to hopefully add on to our Pearson correlation. When I just correlated Cardano Tether pair on Binance to Bitcoin perp futures on FTX, this is a daily chart. I want the Cardano chart to overlay on Bitcoin so you can see both sets of price action. Until then, you see this little compare up here, right? Hit on compare. What's my compare symbol? ADA, right? And I want the Tether pair, which is right down here. Tether, boom. All right, it's going to pull up. What do you got to scale this correctly though. So let's pin to scale right, pin to new right scale. There we go. Okay, so now I don't like that orange color. Silly, man. Silly. Let's actually just make it white so it sticks out. And let's increase it. There we go. This is the power of this indicator, right? Look how much of the time, right? Look at all the breaks in correlation to the top side. Notice slope. Slope on the Pearson correlation means everything. You can be on the side of positive correlation, right? But when it's heading down, that's telling you that the positive correlation between those two assets is decreasing. Look how many times since literally back here when BTC was at, that's showing the actually, what was it at? I've got it on, it's not going to show. But literally, what was Bitcoin? Bitcoin was about 10K down there, guys. Or I think that was about 18K before we had the first big run up. 1, 2. I mean, it was only on the negative side 3 times. What this chart's telling you is that Cardano has been correlated with Bitcoin a lot. And look at all the up moves. Look at all the slopes heading up. Boom, boom, boom. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I mean, tons. It's been positively correlated with Bitcoin a lot of the time. So what are you going to see? Look at the price action. Hell, it's following it everywhere, big time. If I were to pull gold up or SPY up, you'd see a big difference. It wouldn't look like this. Is what this is showing you, though, is that Cardano and Bitcoin have been positively correlated together. What else is that telling you? That's telling you when you were jumping into Bitcoin longs, you might as well have put a long in on Cardano too, right? But here's the trick. This is a daily, right? If you were swing trading, right? Or even putting in long term, you wanted to be in a trade for a month or something, you're going to use this chart. If you're scalping, you need to drop down. You need to use it on lower time frames, like a 15-minute. Look at the 15-minute. Look at the positive correlation. You're taking the scalps. You're taking scalp to the upside on Bitcoin. Look at Cardano going up too. Right? Look at this big down move. Cardano, boom. We start to get the up move. Cardano up right now. Significantly positively correlated. Bitcoin price is going down. So is Cardano. So, ladies and gentlemen and ladies, this is the first way to use the Pearson correlation coefficient. Correlating assets together. Okay, now we're going to go to the second one. Let me get rid of Cardano price action. Boom. I'm going to leave the Pearson up. But what am I going to do? First, I'm going to get in on these settings. And I don't want it correlated to anything. Whoops, actually, I gotta let me reload the chart first. Let me save that base chart, reload that base chart. Oh, it's gonna stay that way, no problem. Boop. Let's just pop off the Pearson correlation, and let me pull it back up. There we go. Okay, Bilbo. Your indicator is just a blue block. Actually, it's green because I didn't save the color, but that's all good. We'll use it in green though. So now, what indicators do you want to correlate to price action? Not directional indicators, because a directional indicator is always going to be positively correlated, right? Because it's a directional indicator. It's literally following price action. Is the indicators that you want to correlate to price action are indicators that aren't directional indicators. So what are two of those indicators? Well, first, let's put on the alpha volatility percentage. Where are you? Give me a second here. There, it's right on top. Goodness gracious. Let's add that. And then let's add on alpha variance. I'm going to do one at a time here. Obviously, we're going to do the AVP first, right? So I'm going to move the AV. I always want my correlation coefficient below it. And listen to me, if you're just starting to learn how to trade volatility, don't try to overlay these, right? Don't try to take this indicator where you're trying to learn basic knowledge on how to trade volatility and try to turn it into our premium indicators. What looks easier? The AVR when you're just learning, or the two indicators separate, right? Leave them separate. Leave them separate. How do you correlate the AVP to price action? You're going to go into the settings. This is what I talked about. You're going to go to the first. Sorry, I'm on the wrong settings. You're going to go into the Pearson correlation. You're going to go to source one where it's set on close right now, where unless you are correlating indicators to price action, don't take this off close. It doesn't need to be off close, right? Just leave it on close. This is when you change it. And when you open up that source, it's going to bring up every aspect of every indicator that is on your chart already. I want to correlate AVP. I don't want to do the SMA border or the AVP SMA. I want to do just the AVP. Bingo.
Yeah, always double
now.
Check. Always double check what you're doing.
Yep, 100%. You want to make sure you're correlating the correct part of the indicator. Now, but here's the thing. If I go into the AVP right here, and I change the SMA length to a 1, and that SMA is just hugging volatility, you can correlate it to the SMA. There's not going to be any different reads. There's not going to be any different reads because the SMA is actually hugging the columns of the percentage. Okay, but right now we have this correlated to the AVP. What good does that do you? Okay, so the AVP is not a directional indicator, right? You make it a directional indicator by understanding expansion, contraction, and the breaks in correlation. So we get a nice freaking expansion in volatility right now, right? Volatility was flashing here. Look what happens when we start to get volatility expansion. It was heading positively correlated, breaking correlation, negatively correlated. Look at that 15-minute down candle. When you get an expansion in volatility, there's a break in correlation and it's negative correlated. Price action, I'm going to say this, I don't care what anybody says, 100% of the time is going to go down. This is just the way this works. This is very powerful when you understand how to use these indicators. Here's another expansion in volatility. Price down because it was negatively correlated. Let's see here. Here is an expansion in volatility. Correlation from the negative breaks starts sloping up positive. We start a nice up move, right? Start a nice up move. Price moves up. So you can see how this works. I can keep posting these. Here's a good one over here for a nice up move. Okay, right. Let's do this one right here. I went sideways a little bit. You had to be careful with this and just be patient. This is where if you set the MA up right, you'll have patience. Let's move this over. Let's go to this expansion. Where did I see that at? Right about there. Boom. Right there it would be if you had this set on a 3. Those columns are breaking above the MA. You're having an expansion in volatility. It's positively correlated. Price moves up. Moves up nicely, I might say. It's probably about $1,500 in price action. Right here, right? You start to get that expansion. If you're just patient and you wait, boom, you're positively correlated. Price action moves up. This is how you take basic indicators like this, right? That aren't, you cannot trade them directionally. People get confused. Well, Bilbo said that the AVP is a directional indicator. Now its volatility is not directional. It's like, no, I never said that. I said that it is absolutely not a directional indicator. But if you add a Pearson correlation coefficient to it, it 100% is a directional indicator. Now, I'm going to resource this to close. Because if you don't and you try to erase that AVP, it's going to close down the whole learning tree, right? The whole study tree. My bad. Now it won't because it's not correlated to it. Let's get rid of that. Let's take our alpha variance. Both these indicators on the free chart, along with Pearson correlation, showing you how to do this. Go into the settings on the Pearson correlation. It's showing all the different variance settings, right? I want it on the variance plot. Okay, and is what I also want to do, because on this specific indicator, I have the look back because for scalping reasons set on a 5 look back. Set the look back on the Pearson correlation to a 5. Wait, now look at all the breaks in correlation. Do you understand now how important it is to understand volatility, expansion? What is variance? Variance is a spread of data around the mean. When variance rises, that's telling you that that data is moving away from the mean. What the variance is not telling you is what direction is it going to the standard deviations away from the mean to the top side, or is it going to the standard deviations away from the mean to the downside? When you add a Pearson correlation coefficient, it will tell you. It will tell you which way that data is moving. Look at this big move right here. Boom. Right there, okay? It was heading positively correlated, right? It was heading positively correlated. And I might add, right before that, I'm going to put another one right there to show you something. Actually, that's just going to confuse you. Let's back that off. That'll come later. So variance starts to move, right? You're getting a rise in variance. What's the correlation break? It's heading negatively correlated. There's that big 15-minute candle I showed you with the AVP, right? The alpha volatility percentage is volatility. The alpha variance is volatility. You're going to get very similar reads. Let's do this little bump right here. Let's do this little bump right here. Takes off again. Variance starts rising. The correlation break is heading negatively correlated. The next 15-minute candle dumps. It's not a big one, but it also wasn't a big rise. All right. Let's go over here. Let's go to this one right here, because now here's an up move. Right there. Boom. Variance breaks above the MA, starts rising. The break in correlation, it was heading negative, but it breaks, the slope starts going positive and immediately goes in significant positive correlation. You get literally nice big move. That's about $1,200 in price action. All right. They're all over the place. Every little rise in every little rise in variance right here, pop, 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 pop. All these little pops, correlation is breaking one way or the other in giving you direction. Understand that. Learn that. Learn how to use the alpha trading indicators. The Pearson correlation is very important to correlate non-directional indicators, non-directional volatility indicators to price action. Once you figure out the basics of that, then move on. Until you have figured out the basics of volatility trading, there's no reason for you to be moving on to anything else. People, for some reason, the human brain, oh, you just got to do oh, no, I want to go up to here. I want to learn how to do this. Trust me, take my advice. Learn the basics of volatility trading first.
Yeah,
that's the whole point.
To hear what you're really saying beneath all that too is don't just use this alone. That's not the idea here. We're showing you how this works and how it interacts with price and how it gives you direction. But you don't trade this alone. All of our trading has to be in confluence with other indicators. So it's very important to realize that and don't do anything stupid. Okay, this is a learning process. Yeah. You're gonna correlate these indicators, and these are for learning. You're not trading. Don't trade when you're getting in here and you're just starting to learn. Do not trade one bit. You're doing this for homework. You're doing this to learn how these things operate, and then you're gonna start adding them together. You're gonna start layering. Okay, and getting yourself in a place where you can then maybe make a trade with confluence with other indicators.
Like right here. Let me pull up the free indicator chart. This is why we have all these indicators on here, right? You want to learn. That's why we put our returns RSI. All right. You have the AVP. You have the alpha laser returns. It's telling you what's going on with the returns, right? And then you've got the alpha volatility quality. Now you got to learn how to use this all together, because now we get this little bump in variance. If you're not scalping, like this is a 4 hour, let's go down to like 5 minute, right? I mean, look at all of the little bumps in variance. How are you going to know if this variance is going to continue and it's going to be a nice big move? How do you extend your profit margin? By using everything together. That's what MJ's trying to say. And if you go over onto my main trading chart, that alpha variance and that Pearson correlation, this is on the paid indicator package. This is all built into one. Now there's some people out there that just want to be like, oh well, I want this overlaid onto this. No, you don't. We built this indicator in a certain way, right? It's easier to read. Not only do you have this is all one indicator now. right? It's not two indicators, right? It's not variance and correlation coefficient, two separate indicators. This is all one indicator right now. And we will, at some point, we're going to do an educational video on the CV right here. But what else is built in? This correlation coefficient that you see right here is built into the CV line, right? It's built into the CV line. If I go over on the inputs right here, let's see here. Where is CV color type? Regular. CV color type. If I have this on regular, this is showing you when the green is showing you when there's a statistical outlier. Okay. Now, look, what if I want to just know what direction the CC is heading? This is telling you when it's green, it's heading into positive correlation, right? As soon as the slope changes and it starts to go negative, right? And if I blew this up, you would see why this went red for a little bit, because this sloped down a little bit right here. Even though it was significantly positively correlated, it went down a little bit. So that's built into the CV, where it will tell you what direction the CC is, built into the actual coefficient of variation. Then you can also change it to just significant correlation, right? So when you're looking at, you see the green and the red on the Pearson correlation, that's telling you when it's significantly correlated. You can build it into the line. Anytime there's significant correlation, that freaking coefficient of variation is going to be green or red. This is why this is in the paid indicator package. A lot of work went into this. It's a very powerful indicator. Very powerful, regular. Let's get back. I love the statistical outliers.
Once you've mastered the basic, man, that's a little taste, puts a little taste in your mouth for the premium indicators.
Yes. And this right here, the alpha volatility percentage and the Pearson correlation, separated so you can learn the basics a lot easier, because there's not a lot of noise. The noise you want to see right here is the expansion and contraction of volatility. The noise you want to see down here are the breaks in correlation. What do you think is going to be easier to learn how to trade the basics of volatility? Using these two indicators like that, or using the alpha volatility radar? Look at the noise. Good luck. You got to learn the basics.
Yeah. All that noise has a purpose, and once you get it down, it looks complicated, but it's not.
This indicator,
a lot of noise.
Yep. And that's what this alpha volatility radar is, a extreme version of the AVP, the Pearson correlation, and then we also build in alpha volatility grade, which is the thinner line here. And alpha volatility grade, we talked about this yesterday, right? What's alpha volatility grade? It's a combination of historical volatility and implied volatility.
We're getting a little off track there. Did we cover all the settings in our correlation?
Yeah, there's nothing to it. I mean, you can make the plot thickness a little bigger, which is no big deal. People figure that out on their own. I mean, that's just basic stuff. The real settings you need to understand are the two source settings in that indicator. That's really the only thing that matters. Or you can change the plot to area or line. Simple stuff. Simple stuff. And we are about out of time. Let's see. I will go over here, though, and I will pull up the setting. But, yeah, there's nothing to it. He's talking about down here, right? If you say you have you turn this into a line, right? You turn the correlation into a line. This is the thickness of that line, and this is how you change it from area, circle, cross, line, step line, blah blah blah, right? That's all. Correlation look back, simple, like I just showed you before. You want to, if you're using an indicator like variance and you have variance set to a 5, set your correlation look back to a 5. If you have variance set to a 10, because you want to smooth out that variance a little bit, right? Maybe you're swing trading. You don't want to scalp trade. You want the variance to tell you, hey, variance is still rising. You change it, you leave it on a 10. If you have it on a 20, change it to a 20. The best setting when you're using the Pearson correlation along with the AVP is a 10. I've studied it a long time. It's the best setting in my opinion. But it's the other, it's like the variance, right? You want to put it exactly what the look back on the variance is, 100%. But anyway, so if you're watching this on YouTube for the first time, right, the link to our Discord is in the description of our videos. You're going to want to come in and check us out. We have a ton of educational information, right? Our educational channels are second to none in our opinions, right? There's nobody out there putting forth the educational material about volatility, probability, and statistics trading like Alpha Trading is doing. We're a friendly community. You can come in here. You can ask questions about those things and you will get an answer. And most likely you're going to get pointed. We're not going to spoon feed anybody. You need to put in some work. You need to come in. You need to read our education channel and then come forth with questions. Don't just pop in and start going, well, how do I do this? How do I do that? When it's already in the educational material. Study that first. Then come back to us, right? And you can ask any questions you want. I'm not saying you can't ask questions in the beginning, but hey, if I notice you're new and you come in and you're wanting spoon fed, you will find out immediately that that's not what we do. We do not spoon fed. We're here because we want people to learn how to do this. And learning how to do this is putting in time and studying these things. We want you to, if you see something in the videos, you'll give us a thumbs up, hit the notification bell. You're going to want to know when we publish videos, right? Because there's a lot of good information in there. And, that being said, I want to thank everybody for watching live in the Discord. We're here for you guys. We damn well support everybody in this Discord, and we fully expect that in return. We publish new indicators. Go. Give us a thumbs up on the indicator. Leave a comment on the indicator, right? If we publish an idea, give us a thumbs up on the idea. Leave a comment for the idea, right? I mean, we're doing this because we like to do it, but at the same time, hey man, we're not doing this for our health. We're trying to help you guys. We expect that help in return. Okay, that's all we ask for. But yeah, that's going to end it today, ladies and gentlemen.